Hi folks, this is Craig, the options linebacker, and this is the weekend report for Sunday, October 4th. I'm going to start this weekend's commentary with the S&P 500. We have the monthly chart on the left-hand side here and the weekly chart on the right-hand side. On the monthly chart, the S&P has gone from a higher high to a lower low as of March of this year and has rallied up to the confluence of resistance from this trend line, which matches all of the significant lows going back into the early 90s, and also with the 20 period moving average here. So a couple of resistance points overhead so far have kind of come into play to conspire against this chart right now, and we're starting off the month of October with a slight drop. Now, something I've been talking about for quite some time now, literally months, has been when we go from a higher high to a lower low like this, the result will be a lower high at some point. It's a question of whether it happens here, whether it turns around at 1100, or whether it goes as high as 1200 before turning around. What happens after that, I think, is going to be most important for the next couple of years, because either after that lower high comes a higher low and then we go higher from here, or we turn around and keep going lower. We don't know which it is yet, so we just have to pay attention over the next few months and see which way the market really wants to go after the lower high is put in, whenever that is. Now on the weekly chart, we're also in some interesting wave structure, because we've seen as the market moved down, we had 5 waves. This is wave 3, wave 4, and finally wave 5. We had 5 waves down, so this is a major Elliott pattern. And then normally after 5 waves down, you're going to have an ABC corrective pattern bounce back up. And that's what we've had so far. But it also could be turning around here and spinning 5 waves to the upside. What we don't know is whether this is the end of wave C or whether this is just wave 4 down and then wave 5 is going to come after that. We don't know that yet. What we do is we pay attention to the boundaries of this wave as it comes down here, and we have one thesis if it keeps on going, and we have another one if it turns around and rallies from here. Now let's keep moving down time frames. We'll go down to the daily chart on the S&P 500. Now I've thrown some indicators on here that help me understand and kind of confirm what the price is telling me. First of all, what we notice is in the price, the Bollinger Bands are coming into play. The price bounced off of the Bollinger Band on Friday morning, and what we've seen is that the Bollinger Bands tend to do a very good job of kind of bottling up the price. Whenever it gets just above the Bollinger Bands or bounces off of them, it tends to kind of go back inside the Bollinger Bands. So the Bollinger Bands, to me, really illustrate where the sustainability of the trend. So what we've done is the price has moved down actually 4 standard deviations just in the last 9 trading days to go from the Fed announcement up here back down to Friday's low. So that's a pretty strong move to come down here. But right now what the Bollinger Bands are showing is that it's kind of reached the end of sustainability. So any further move to the downside that closes below the bands will likely get reversed. Now let's also compare this move that we're in right now, this pullback, to what we saw back last June. What we saw last June was a move down and a pop back up and then a final move down. So kind of an ABC corrective pattern, if you will. What we also saw was bullish divergence on the MACDs. Now we're not seeing that yet from the MACDs. In fact, they're confirming the fact that things are still kind of weak out here. So we may yet see some further downside, but I don't think just yet we are oversold right now. Now this is a little bit different chart of the S&P 500. This is where I'm looking specifically at the price and not any indicators, although I do have a couple of moving averages here, and this red moving average is the 50 period moving average. This is a widely known, watched, and followed moving average, so it's no surprise that we did get a little support on Friday morning as the price came down to this level. Now let's step back and take a look at this move. So after the bottom in July, we've moved all the way up from the 875 level up to about 1080, so almost 200 points. And really we haven't had that many significant pullbacks at all. In fact, none of them have been really what you consider to be a 38.2% Fibonacci pullback. So of the July rally here, the 38.2% pullback would be right around S&P 1000. So this would be very, very normal to see it come down and retest that pullback. In fact, it wouldn't even make a significant lower low yet, even if it did that. But I don't think it's going to move straight down there unless we have some kind of catalyst which is extraordinarily bearish. I think what we'll probably end up seeing is some kind of little relief bounce that comes back up to this recent breakdown level, which is right around 1040. And then we'll see probably another wave down at that point. So we'll probably start working our way down inside this channel kind of through wave action until perhaps we do get to that 1000 level. And then as we see kind of on the weekly chart, this is going to be whether we bounce up from here and that fifth wave on the weekly chart, or we start heading down from here and start making lower lows and lower highs on the weekly chart. So it's this action in here over the next couple of weeks that I really want to watch carefully to see whether or not we have hopes of going higher from here and going after some of those upside targets on the weekly chart, such as S&P 1120, or whether we're going to start to roll over again into a flat 2010. We have 2 weeks left to trade for October positions, and right now we have a call spread up here at Spider 111. We have one down here, a bull put spread at Spiders 87. So we've got a nice wide Iron Condor, and the price as of the past week or two here has really come in very, very nicely, much closer to the center of the Iron Condor. What we also have in place now are these very nice defensive butterfly trades, which are going to kind of come of age. They mature, especially in the last week or two before expiration, and they become very handy to have in case we have a continued move back up here. Or I can't imagine that we'd have something this deep, but even if we do have a deep, deep move down here. So with 2 weeks to go, we look pretty good. Now I started to nibble on November offense this past week, and we have a put spread down in this area with a short strike at 91. So we've gotten our put spreads in place, and we're looking to get our call spreads on any bounce up later on this week. I'll finish out this weekend's video by looking at our delta neutral Iron Condor that we use the XSP for. And actually the price is now back within the strikes of the Iron Condor, pretty close to the current max profit that we have down here. And what's nice is that we've hedged to the upside, so any additional movement to the upside is going to put the price within the max profit zone. Any additional move to the downside, we have a long ways to go down here and still stay within this nice profit range right here. So we look to be very, very good with the delta neutral Iron Condor as well. So that's it from the locker room. Enjoy the rest of your weekend, folks, and we'll see you next week.